Hello friends and welcome to Sharekhan Advisory Alpha Delivery Picks. Friends, as you all know that Alpha Delivery Picks is a new product which we have launched at Sharekhan Advisory, which focuses on opportunities which are available in the markets at times when there are corrections and when the prices come down, and stocks which are available at good valuations, and also at the same point of time technicals also support them as a buy. We have already released our first idea, Reliance Industries and the Alpha Delivery Picks. And now we have come out with 4 new ideas which we recommend you under the Alpha Delivery Picks. They are Bharti Airtel, Bank of Baroda, Tata Global, and Balrampur Chini. We will be explaining you exactly the rationale behind buying these stocks, based both on the fundamentals and the technicals. Friends, let me take you with some of the important points while executing this strong buys which we have recommended under Alpha Delivery Picks. For Bharti Airtel, what we suggest is that buy the first tranche, that is 50% of the overall money that you would like to buy for Bharti Airtel, between 320 and 345. So the average tranche price, the first tranche price will be somewhere around 332.5. And the second tranche, the level is around 280 to 295. So accumulate that the balance in 50% between 280 and 295. See, the overall buy average price for Bharti Airtel will be somewhere around 310. So we'll keep a stop loss of around 269.7 and can target around 405, and the second target is 440 for the stock. Similarly, for Bank of Baroda, the first tranche, that is 50% of the overall amount that you allocate, should be bought somewhere around between 495 and 523. The second tranche between 470 and 485. So the overall average buy price would come at around 493.25, stop loss of 429.10, and can target 620 and 740 for Bank of Baroda. Tata Global, the first tranche level is 142 and 153. The second tranche level is 121 to 129. So the average buy price would be 136.25, stop loss of 118.5 for a target of 180. Similarly, for Balrampur Chini, the first tranche level is 38.42, second tranche is 32 and 34, taking an average buy price of 36.5, keeping a stop loss of 31.8, can target 45 and 54 as second target. Bharti Airtel is the leader, as you all know, in the Indian mobile telephony space. The Indian telecom environment is turning favorable with a drop in its competitive intensity, and the benefits of the consolidation is now flowing into the incumbent players. With the regulatory overhang that we have seen recently on this sector, now those regulatory overhangs are now receding, and the companies are now focusing on the quality of the revenues rather than the volumes which they were focusing till now, and we are expecting the better times to come ahead for the sector as a whole and also for the company. There have been recently some recommendations which came out by the Telecom Regulatory Authority of India, where they have reduced the reserve base price. What we feel is that the reduction on the base price is a welcome step and is the right direction and a positive for the sector as a whole, and specifically for the incumbent players. As far as the results are concerned for Bharti Airtel for the Q1 FY 2014, the company has exhibited a very strong pricing power, a growth of 4% quarter on quarter, and also the robust data in terms of the revenue. Also, there has been a 190 basis point sequential margin expansion in the Indian mobile business. So overall, in the wake of an improving business fundamentals, relatively less harsh regulatory moves, and the impending mergers and acquisitions in the sector, we remain positive on Bharti Airtel as far as the fundamentals are concerned. Technically, Bharti Airtel has witnessed a sharp pullback near the demand zone of 274 and 285 shown in the chart. The upward sloping trend line is also seen to remain intact on a closing basis. So you can target for Bharti Airtel in the near coming months of around 405, which is the first target, and second target of around 440. Our next pick in the Alpha Delivery is Bank of Baroda. Bank of Baroda is among the top public sector banks, having a sizable overseas presence in 100 offices and in 24 countries, and a very strong network of around 2,400 branches across the country. The bank's performance metrics has been superior as compared to other PSU banks, though there has been a recent deterioration in the asset quality, which is a cause of concern for the company. But nevertheless, the provision coverage ratio and the capital adequacy ratio is highest among the top 5 PSU banks. Its NPAs are lowest as compared to the top large PSU banks at around 1.69%. As compared to State Bank of India, the NPAs is around 2.83. For Punjab National Bank, it is somewhere around 2.98, and Canara Bank 2.48. Recently, RBI has set some rules for the banks to swap the offshore borrowings, which is positive for the bank. And the management has been also very confident as far as the NIMs are concerned, which are likely to improve, and the slippages will moderate in the coming quarters. We are expecting the earnings for the companies to grow at a CAGR of 8.2% over FY 13-15. As far as the valuations are concerned, recently we have seen the stock correcting sharply due to the asset quality concerns, and is trading at a very reasonable valuations around 0.55 FY 15 adjusted book value. So we remain positive on the stock going ahead. Technically, Bank of Baroda, there is a change in the polarity principle seen on the weekly charts, with earlier supply zone of 480 to 500, which is turning now into a demand zone. The positive divergence between the RSI and the price is seen on the daily charts. The RSI is now turning upwards from the oversold zones. The recent large volumes that we have seen in the stock around the demand zone are indicating very stronger buying support. So you can target Bank of Baroda around 620 as a first target and 740 as the second target, keeping a stop loss of around 429.1. The next idea is Tata Global Beverages. Over the past few years, Tata Global Beverages, formerly known as Tata Tea, has transformed itself from a mere tea and coffee company into a complete beverage maker. The recent addition that the company has made, the Mount Everest mineral water, to its product portfolio and its tie-up with the PepsiCo company, has made a mark in the non-carbonated beverage space and is likely to be the new drivers for the company in the long run. The recent joint venture with the Starbucks has also helped the company to explore opportunities in the coffee retailing space. We believe that Tata Global Beverages is inching towards its aim of becoming a natural beverage player in the international market. We believe the company has also changed its overall approach from a conservative to a very aggressive approach towards its growth strategies, and we believe that it is likely to achieve a very strong profitability growth in the medium term. As far as the earnings are concerned, expecting the top line and the bottom line of the company to grow at a CAGR of 12% to 18% for FY 13 and 15. As far as the valuations are concerned, the company is trading at around 19.6 times its FY 14 expected EPS of 7.7 and 17.34 FY 15 expected EPS of 8.7, which is substantial discount to the current valuations of the overall FMCG basket. In view of the recent earnings visibility and upside, we remain positive and we recommend buy recommendation on Tata Global Beverages. Having a look at technical check on Tata Global Beverages, on a weekly chart, the stock appears to have consistently taken support around 121 and 128. The change in the polarity principle seen on the weekly charts, with earlier supply zone now turning into a demand. Stock is seen maintaining the uptrend as seen up by the up sloping trend line. So you can target for Tata Global is 180 and keeping a stop loss of around 118.5. The next idea is Balrampur Chini Mills. Balrampur Chini is one of the largest sugar producers in India with an annual output of 0.7 million tons of sugar and an installed capacity of 76,500 tons crushing per day of cane crushing. It has 10 mills which are located in the northern Indian state of Uttar Pradesh. In addition to the sugar, it also produces alcohol and power as the byproducts. What we believe is that the successful implementation of the food security bill is likely to lead to a better sugar demand going ahead, and which will also support the sugar price and also reduce the supply glut. Balrampur Chini Mills is one of the largest and the most efficient sugar producers in the country and is better placed to capitalize the positive structural changes which is witnessed by the industry. It has a very strong balance sheet. The debt to equity is around 0.9. The sugar decontrol and the 5% ethanol blending will provide a better operational and financial leverage for the company going ahead. At the current market price, the company is available at a very favorable risk reward ratio, and our price target for Balrampur Chini Mills is based on 9 times FY 2015 EPS of 5.67. This is in line with the historical mid-cycle valuations for this stock. So we maintain a buy recommendation on this stock. Technically, Balrampur Chini appears to found buying support close to 34 levels. In the past, 32 and 34 levels have provided very strong support for this stock. On the daily charts, the momentum indicator RSI shows positive divergence, implying negative pressure on the stock, which has waned now. On the daily charts, breakout from the falling trend line with strong volumes is indicating a trend to move to high levels.